So I wanted to let you guys know there's a couple new videos that I've posted over at the forexstreet.net website under my blog. So I'm going to share those with you real briefly. It's two videos that I just posted. One's a psychological take on, you'll hear a lot of the fundamentals behind what the S&B has done and what the BOJ is trying to do and things like that. But what's really interesting to me is the fact that the S&B has been so effective and the BOJ has been really ineffective. Okay? So if you head on over to the blog, you'll see that. I also have videos that I've posted on my chart tutorials. In other words, the charts you see here on these webinars. I happen to get a lot of questions about how I actually set them up and which tools I'm using and so forth. And they're all, and by the way, they're all free tools. The tools that I use on my charts, they're all free tools. They're tools that you can get either from my blog, like my 34 EMA wave and grab candles, or they're tools you can get from, for example, your broker. For example, if your broker is an MT4 partner and an AutoChartist partner, the tools that I use, like the AutoChartist chart pattern recognition and the power stats, those are free tools right through your brokerage. Okay, so I share the setup on that over at, and I'm just kind of taking all my videos and putting them in one spot, and so you can check that out over at RagheeReport.com. All right, and then of course I have my daily commentary at the Daily Forex Trading Edge over at Forex Street. So there's plenty of places where after our conversation is done here on Mondays and Wednesdays that you can fill in the blanks and see what I'm up to, both in video and on my written commentary. So I'm excited about that. So let us get over to the charts because that is where the action is at, and we will take a look at what is going on today. Now, obviously from a weather perspective, considering what happened over the weekend, I think a lot of people were expecting a whole lot more, and I'm not saying that there wasn't a lot of damage or, there's not a lot of power outages and things like that, but I think people were expecting even the worst for up in the Northeast. Having lived through many dozens of hurricane scares and a handful of actual hurricanes that have hit my area, I could absolutely sympathize and understand what it's like to have days of no electricity. It's funny how as a society and as a trader, I'll freak out when my internet goes out or when my cable goes down or when my internet connection's even just slow. And it's amazing what happens to you psychologically when all you're concerned about is how you're going to keep your food from spoiling and how you're going to feed your family. Literally, how you're going to eat and survive. It literally goes into that mode just like that. It's fascinating. And from a psychological perspective, I'm sure a lot of those people are dealing with that right now. No air conditioning, no electricity, things like that. So psychology is a big part of what I talked about, by the way, when I was discussing my BOJ versus the S&B, my take on that. And it's really interesting to me right now, and I don't know how many of you have been trading the dollar yen and the dollar Swissy. I'm sure many of you have been and are. You take a look at these two pairs and you take a look at the effects that the two central banks have had on the underlying currency. And like I said, I recorded a video specifically on how interesting it is that because we don't have a playbook for the kind of tactics, and I don't mean that in any negative way. I think the S&B is really, from their perspective, their objective, which is to slow down the strength of the franc. I think they've done this masterfully, okay? While the BOJ is basically pulled from the same playbook they always have. So sell a lot of yen into the market, Traders like yourself, traders like myself, we just simply wait it out. Wait out the, if you can, and I don't know how many of you how many of you got stuck in the intervention, by the way? Were short during the intervention. I was. That was one of the things that happened to me. If you take a look at this right here, and what was interesting about that price movement is that it simply was the intervention. A lot of people obviously played the momentum, but I'd say just as many people just sat tight, held on to what was a difficult time to be short, but realized that, hey, selling a bunch of yen for a day or two and warning the market of potentially selling it again really wasn't going to change the trend, right? So I did a quick video on that, and the fact that the SNB really has, I think in many ways, thrown the market a curveball, and because of that, they have effectively been able to allow the franc to continue to rally. What's really interesting about the dollar Swissie's continued strength, and again, I don't know how many of you look at the US dollar, and how many of you are watching, for example, what's happening in the equities market in the US, but we had a couple good days of equities movement. We had a strong close on Friday. Right now, we're pre-market looking like we're going to have a strong open. But, overall, the sentiment has been very bearish. The dollar index, we are nosediving below 74. In fact, we're actually reaching a fairly decent low today with the 73.56 level. Remember, the near-term low right now is 73.51. So we're right at the dollar index range lows. The dollar index is no longer in a downtrend. I know it sounds funny with all the pessimism out there, but if you were to step back and look at the US dollar index, it's basically an inverse view of this chart. Is the euro US dollar in an uptrend any longer? My opinion is no. I don't believe this chart to be reflective of an uptrend. So imagine this chart upside down. Take this chop and put it down here at the bottom of the chart after a downtrend, and that's what the US dollar index is doing. Maybe even a little more cleanly than this in some ways. I'd say it's about inverse, actually. We're basically at the range lows, just like we're near some of the initial level, anyways, the initial ceiling of the range high here on the euro US dollar. So when you look at what's happening to the dollar Swissy, then this dollar Swissy is weakening against the dollar, which is also very weak. So that gives you an idea just how much selling is going on in the franc, just how much the franc is weak. And again, everything's on a relative basis in the forex market. Just how relatively weak the franc is against a very weak pair, the dollar, or weak currency, the dollar. All right. So we're going to have what looks to be a strong open in the equities market, which is going to further put pressure on the dollar index. The dollar is weakening, by the way. I did get a question about the Aussie and the Kiwi. Let's go ahead and take a look at the Aussie. What's interesting about what's happening in the Aussie right now and the Kiwi, a lot of people have been asking me, where's all this strength coming from in terms of this COMDOL? And what you've got here side by side is one tool with the Aussie daily on it in terms of the wave and the grab candles, and here is that same chart with some chart patterns and the Power Stats plugin, the Power Stats price movement range plugin. Okay, so what's really interesting in terms of the movement higher is, well, obviously we've got this dollar weakness, which is allowing the Australian dollar to gain. Think also what's been happening to crude oil the last handful of sessions. It's twofold, right? Think of the relationship crude has back to the Aussie, of course. It's a twofold relationship. First of all, consider that when the dollar is weak, it allows commodities to gain. when the dollar is weak, it also is reflective oftentimes of what? Equity strength, of risk appetite. Okay? So you've got risk appetite driving equities higher. You've got risk appetite driving commodities higher. And then you look at the fact that crude really was trading down near $80 a barrel just, gosh, on the 19th, about 10 days ago. Okay? And here we are now up near what could be a place where it could become much more difficult for the crude to continue moving higher, but there's been a lot of resistance as crude nears $90 a barrel, really 89. But it's up near those range highs. And that in turn is helping the Aussie as well. So the Aussie is benefiting from, or the Aussie US dollar specifically, is benefiting from a weak dollar, benefiting from risk appetite, benefiting from that crude oil market and the commodities market that tends to do very well in an environment of a weak dollar and strong equities. And I look at the Dow Jones, by the way. And again, don't underestimate the fear that traders had that perhaps the New York Stock Exchange wouldn't open today based upon Hurricane Irene. And the fact that things are pretty much, seems to be all normal this morning for the New York Stock Exchange, for the NASDAQ. Okay? There was no damage to the systems. No infrastructure damage. So, what'll be interesting is whether or not the strong open will be able to be sustained throughout the day. The reason I'm interested in the Dow, we're talking about Forex here, right? So why am I interested in the Dow? That Dow gives me an incredible insight into risk appetite. Okay, so let's take a look at that Kiwi. So, considering what's been happening in the New Zealand dollar, US dollar, let's jump on over there. So, what's been happening there? Well, it's very much the same story, right? Weaker dollar, stronger crude, stronger commodities, risk appetite reflected by that stronger, or at least a decent bounce we've had in the Dow. We are within the context of a downtrend on the Dow, and what we've done is correct up into an area where I think it's going to be interesting as to whether or not we'll be able to sustain movement higher. We've actually rallied up into what would be actually a swing short on the Dow futures that I also watch between the 20 period SMA on the close and the 34 period EMA on the low, which is that swing short zone that I talk about when I'm looking at a downtrend and we're discussing shorting a Forex pair. So the same opinion goes here. I'm very interested in how much more bullishness the Dow's going to have between, say, 11.3 and 11.4. Okay, we're probably going to open, like I said, close to 11.4 this morning in the Dow. But for those of you that have a difficult time determining that risk appetite, risk aversion, tug, that push-pull between the Dow and the dollar as you're looking at your pairs, just remember that I day traded stocks for a lot of years. And one of the things you learn as a day trader, whether in any market, is there are certain times of day you have to be very aware of. And of course we have our 9:30 bell that's going to ring. Okay. After that, consider what happens the first 20 minutes. All the orders that we're waiting. Remember, this is not a 24-hour market the way it is in Forex. Equities are not that. So you have this rush of orders the first 20 to 30 minutes. Those orders get filled. That period is called the opening, or the clearing, right? The clearing period. And as the clearing starts to wind down between about 9:50 and 10 a.m. Eastern Standard Time, you actually start to get a better look at what the remainder of the trading day may be. We have a reversal time at 10. We have another reversal time around 10:15. Remember that you'll have also economic reports that might be hitting the market at 10. And then you'll see a better look at least what the first half of the trading day is going to bring up until the East Coast lunchtime. Okay, so when you think about trying to use the dollar and the Dow to understand risk appetite, risk aversion, which is a must, in my opinion, if you are trading the U.S. session, just keep an eye on the clock and don't assume that a strong pre-market is necessarily going to be able to sustain the opening, the clearing, and continue into, say, the first half of the day going into lunchtime. So that's what I'm watching right now, just how much this rally will last. Because, by the way, if the dollar starts to strengthen and if equities start to pull back, what in turn is going to happen to commodities? They're going to go down. Crude oil will weaken. Okay? What happens as the dollar goes down or up in relationship to risk appetite or risk aversion? You have to consider what that means to the pairs that you're watching. Okay, so it is absolutely all intertwined. You can't take one out of the other in terms of the relationship. It's not an island, right? Okay, so in terms of some of the setups that I'm watching today, talking about crude, let's head on over to the dollar Canada. So the directional bias in the dollar Canada, I think still is up, but it's definitely looking more neutral as the blue grab candles are taking hold. Okay, we have the 12 to 2 o'clock angle of the wave. You notice that right there. But what's happened recently? I think recently what you'll see in this area right here, what's happened? We're starting to show signs of more of a neutral market sentiment. However, the wave is still angled higher, so I'm going to take at least what is mostly a bullish to maybe slightly neutral directional bias from the daily. This pullback, this correction of the uptrend that we're seeing, and by the way, could I pull a Fibonacci here to get a perspective of the correction? Sure. There it is. We're just crossing through the 38.2. On our way maybe to a test the 50. We'll see. There's a lot going on between here and the 50. The most important thing is a subtle little black line that I've got cutting through this chart right here. I want to actually make it a little bolder and show you what it is, which is the 200 period simple moving average. The most psychologically relevant indicator that you could apply to a daily time frame. In fact, this combination is probably the most psychologically relevant, most well-followed pair, time frame and indicator that you can watch. Look at where our low was. Okay? We nailed that and then bounced. Watch this moving average. Watch that 200 period simple. It's going to be very important to watch. Okay? All right, so having said all that, if the weakness is going to persist, if you feel that, hey, there's a good argument here for maybe this market rolling over. Certainly, we could look at, for example, let's look at there's two indicators I'll look for a rollover. Okay, one is, pull it up right here. There we go. Moving average of oscillator, which is essentially a signal line MACD. I'm going to actually darken these lines up just a little bit. There we go. And the other is the CCI. There we go. 20 period CCI. And there is that. All right. So both of them are showing a lot of bearish momentum. Obviously, we've had a very dramatic move lower. My CCI is well below 100. My MAC is negative. Is that enough to get into a trade? No. In fact, I will not consider a trade on this chart unless or until we break the 200 period simple and the 34 EMA low, which is waiting right down here. Okay, that will then be potentially a rollover. But until then, I'm going to leave the daily chart alone, and I can focus on the setup that's occurring. We have some nice downtrending charts, setups that are occurring on the 30 and 60 minute dollar Canada. Nice angle of the wave here. This is the 30-minute chart. 4 to 6 o'clock wave. If I get a healthy little correction and bounce up, I can look at shorting that correction higher. Here's a 60-minute, also in that very strong downtrend. Now, if that bounce off that 200 period simple, which is the same low we're looking at right here in the intraday chart, if that does indeed end up holding as resistance, okay, assuming that it does, here's a Fibonacci retracement I could consider. That would put an aggressive, an aggro short, for those of you that might want to consider doing that. It would put resistance in an aggro short waiting at the 23.6. On the 30-minute chart, same Fibo, okay? Trying to see which one of these highs was higher. There we go. Same Fibo. Again, that 23.6 would be the aggro entry. But remember, what's interesting about the 30-minute chart is you've got two tools in a very small area. See that right there? In a very small area, you've got the 34 EMA low as well as the 23.6. So that's definitely a short. But consider what you're going to need to continue the downward movement on the dollar Canada, or this rollover. This is the loonie strengthening. Why is the loonie strengthening? The dollar, well, at least against the dollar, because the dollar is weak. Why is the dollar weak? It's dipped below 74. Why is it dipped below 74? We're up 120 points pre-market. The bell's going to ring in about 1 minute. Okay, but we have a lot of strength in the Dow, pulling up commodities, driving the dollar lower. If crude oil is stronger, that helps the loonie strengthen, which again is another factor helping this movement lower. We're going to need all these things in place, but what I'll also need is perhaps a little bit of some profit taking, maybe a little bit of a short amount of weakness on crude, on the Dow, a little bit of bounce in the US dollar index, so that I can get this correction and then let the overall trend of the morning, which seems to be some risk appetite, we need the risk appetite to then resume. That's the situation in order to get that swing trade intraday. Okay? All right, bell is rung. We're already up triple digits, up 111 points. I'm going to wrap up our talk right here. Consider the pieces that have to fall in place for you to be able to get the follow through on the pairs that you watch. Thanks as always for joining me. I'm Raghee Horner, and I'll see you in our next talk.